Louise Bedford here. I'm your host of the Talking Trading podcast. This is how traders excel. I have got a special treat for you today. I have got Tom Basso, market wizard, with us. You might remember the Jack Schwager New Market Wizards book that Jack wrote back in the 90s, and that was instrumental for me. And I read this interview way back then. It was one of the very first books that I read about trading, and it just captured my heart. And to have interviewed Tom several times now has been an absolute pleasure. Tom Basso, welcome to the show. It is wonderful to see you again.
It's good to be here, Louise.
Tom, I'm so excited about your new book. I wanted to start with that because you've got some terrific insights. And I know with a new book, it's like holding a newborn baby. It is so exciting to have that new book in your arms. And I would love to hear more about it. The All-Weather Trader. Tell me more about your book.
It's sort of I started writing Substack pieces, just little, 1,000, 2,000 word little snippets about certain topics. And then I've always been helpful trying to answer trader questions over the years. And I got the sense of what traders typically are struggling with and the different kind of mileposts along the way in my life that I discovered these aha moments, or I said, aha, this is important. I should work on this. And I started about, 2 years ago now, thinking about, maybe I should just pull all this together in one place, like a book, and just start going through one after another and just trying to deal with the different aspects of trading from the standpoint of a newbie trying to get that done. And so one thing led to another, and first an outline sort of happened, and then I started filling in the pieces, and all of a sudden I started writing. And about a year and a half later, here we go, launch date next Tuesday from the time of this interview.
Oh, how magic. I've, of course, as you know, written 5 books myself, and everyone has been special in different ways. But I think the thing here is that you've had such an amazing background when you were trading with Trendstat. So you had $600 million under management at its peak. So you have traded very large sizes, but you also have the ability to remember what it's like to be a beginner, which I think is quite unique. And having such a firm, structured engineering type of mindset where you've been able to work through things methodically, I think always helps with a book. You might know I'm married to an engineer, actually, Tom.
Ah, lucky you.
Yeah, I know. How good is that? It's such a good background for having structured thinking. And that is something I really like about the way you represent all of your findings. I know that Jack Schwager has called you Mr. Serenity. Now, I love that. It makes me feel calm even just saying the word serenity. Perhaps you could give us a little bit of background about how that title was coined.
I think Jack, who's a little bit more caffeinated than a lot of people, and does a lot of his transcribing work for the chapters in the middle of the night with a pot of coffee nearby. I think he's a little high strung sometimes, and he, in the early years, was gravitating always towards traders who had very hot track records, the stereotypical Michael Douglas, you know, stereotypical trader under stress and maybe doing too much alcohol and too many drugs and living this wild lifestyle. And I came from engineering, and to me trading is I never considered myself a trader. I considered myself a businessman who ran a data processing facility that, as an outflow of the data processing, took in data from the markets, processed it, and shipped out orders. If you want to call me a trader, that's fine. I'll take the title, but I don't think I think of myself as a retired guy that likes to cook, dance, sing, play golf. And oh, yeah, there's that 40 minutes a day or so that I get in front of the computer and actually run some numbers and move my stops and get ready for the next day. If you want to call that trading, that's fine. I'm okay with that. But that's just a small portion of my life. I've got a lot of other things that I do too. And I think too many people tie themselves to the trader label and they have this weird sense of that. And I think Jack saw that in me and thought, wow, that's really strange. He's so calm and he's just processing data. So he was struggling for what to call me because he labels everybody in the books. If you notice, every chapter, you get a nickname for every person. And so he called me Mr. Serenity, asked me if I was okay with him calling me that. And I said, hey, it's your book. You can call me whatever you'd like.
I like that. Jack is quite a character. I've had a few conversations with him. I
Great guy.
do.
I love Jack.
Yeah, I do like that you're looking at that spectrum of trading where you've got the complete manic type of behavior, where you've got the A type and that's all they think about, and maybe they're even more short term in their views. And then you've got the more focused, relaxed, serene type of trading that you have helped with a lot of people with their identity role model. Now, is that one of the reasons why you called your book The All Weather Trader, to incorporate that there is a spectrum of personalities that needs to trade a spectrum of different markets?
Right. If you look at what a lot of traders face, you look at Twitter posts, for instance, you see a lot of people saying, you know, the market is clearly sick right here. I'm going to stand aside and be in cash. Okay, that's one thing to do. If that's your strategy, fine, and no problem with it. But you could also, at the same token, say, you know, the market is sick. I'm going to exploit it. I'm going to attack that risk and actually try to make money to the downside. So you could short, you could do various covered call strategies. You could do, you could sell option premium on the call side of things and try to bring that in. Although you got to watch yourself there. You could do spreads to protect it a little bit. There's lots and lots of different things you could try to do. You could diversify off into some futures markets. And if bonds, in fact, are going down because interest rates are going up, because the Fed continues to raise interest rates, well, then over the long run, you'd rather be short debt instruments than long, so you can make some money that way. So the all-weather concept is a term that tries to describe a trader who says, I don't really care whether it's going up or down or sideways. I am going to try to make money no matter what happens. And
Mm, mm.
it's a bit of a challenge. A lot of thought had to go into it. It's been a lifetime of thinking about this. And kind of the reason I wrote it now is I think I've figured out ways of dealing with all types of markets and incorporated that into my 9 strategies that I currently use across some 60 positions currently. And when I'm fully loaded, I'm probably down to about, let's see, probably about 45, 46 now, something like that. So we're not running a huge amount of positions because a lot of the long ETFs have gone to cash. But, you know, I've got hedges on, I've got some futures trading, I've got crypto futures I'm trading, I've got about 26 markets or so in commodities and futures that I'm trading, currencies, lots of exposures to a lot of different things, and they're all in up and down directions. So I can attempt to make money no matter what the market does. And I think that's what all weather means to me.
Oh, I love that. I run a mentor program, as you know, and it's our
Yeah.
23rd year of running the mentor program. One of our bylines for the mentor program is to trade every instrument over every time frame, but where it's your own trading plan. And that way you do have that spread. I remember once we were talking about this concept about how to maintain balance. And one of the things I continually play over in my mind is you were saying there's 1,000 different data points representing 1,000 different trades. That one trade is just one data point. Oh my gosh, I think I've quoted and quoted and quoted you on that.
Well,
Is that how you've been able to maintain that balanced view on a specific trade?
I had a trader ask me within the last 24 hours, he said, I've had 19 trades in a row negative. And what should I do? How do I deal with that mentally? And I said, well, that's only 19 of your next 1,000 trades. It's pretty immaterial statistically. And he looked at me and said, yeah, I guess so, but that's hard to take. And I said, well, you just got to, step back and get a bigger picture towards the thing. And when you start thinking about a sample size of 1,000, I've had people send me studies that they've done over like 40 years of data, and they've got 87 trades in 40 years, and they think it's so meaningful. And I think that's only 87 trades. That's not even 1,000 over 40 years. That's an insignificant number of trades. You're cherry picking, you're over optimizing, you're filtering the heck out of it. And you're just picking those 87 perfect trades that made you billions of dollars in the simulation. That's not real life. You're going to be sorely disappointed going forward. And I think that's, when you get a shorter term trading system, a little bit that in 40 years, you've done, 40,000 trades or something like that. Now you're getting a little bit more meaningful, perhaps. You still got to, realize that historical simulations do not predict future results, as the disclaimer frequently says on the legal documents. And I think that technology has gotten to the point where data is so pervasive, and the math and the ability to run simulations to the nth degree. You can run these optimizers that just hone in on the 17-day moving average as your best fit. And I don't ever do that. The reason I do 21 is there's 21 trading days in a month on average. So I figure anything that happens inside a month, I don't care. So let's use 21. That's how I pick the parameter. I don't run 20, 21, 22, 23 and try to figure out that 21 might be optimum. It may or may not be. I've never run it. I just use my judgment and I say that's about the speed I want to trade. And so that's what the parameter set's going to be. And I think a lot of people just use technology, or misuse technology is a better way to put it. And they get bent out of shape over one trade even. It's up 50%. Oh my God, let's sell half of it and go out to a steak dinner tonight. Or my God, it's down and I'm just almost right to my stop and it's going to hit my stop. Maybe I should just take the loss early, or maybe I should cancel my stop and just watch it for a while. Or, oh my gosh, there's so many ways of screwing it up mentally. And I think if you then step back from it and say, look, I need to do 1,000 of these, it kind of de-emphasizes the current trade and makes it less material and therefore, easier to take and kind of push off there, and be a little more serene about it.
And I do see that with beginner traders, especially because they don't have enough data points to be able to draw that impression from. The other aspect that I think is quite interesting with this is that I remember hearing how what you were looking to do is with every trade, keep continually improving so that you were following your trading plan more specifically. And the way that I represented this to my daughter when she first got her job, Tom, I used your advice and I said, look, your role here is to each day just suck less than you did the day before. She's taken that on board.
I don't think that's a direct quote from me, though. I don't think I put it
No, admittedly it's
made
not.
that up.
I did improvise a little based on your sentiment. Now, I'm interested as well because you started trading, I think it was when you were 12, wasn't it? Such a young age. I love that. I also started when I was quite young. I was 16, so quite the octogenarian compared to your age of 12. What advice do you have for parents who are looking to encourage their children to trade and get involved in improving their own money scripts?
Well, it's tough, but it's teaching kids to save money. One of the things we've done with our granddaughter is to try to think about uh, programs where you open a little simple financial account, and if she wants to save some money, then you can say, all right, well, if you save it, we'll double it. If you want to spend it, it's yours to spend. So different ways of thinking about it. And it kind of gives her that long term. All right, let's see. If I spend it now, I get immediate gratification. But if I can double it, if I don't do that, that might be good for the future. And you get them thinking a little bit about the future. And I think that's best you can do. I mean, when you're 8 years old or whatever, you're not going to have a sense for uh, high finance or investments that much. But and at 12, I didn't have a whole lot of sense for stock market going up and down. I learned that owning that mutual fund and seeing that it indeed had risk. It went up and down. And, after 12 years or something, maybe not that, maybe 10 years, I broke even in the thing and realized that I had spent way too much in commission costs on the thing and way too much risk with the down market, and did nothing to mitigate that. And that was through the 73, 74 bear market, where 50 cents on a dollar for the S&P 500 in the States. So, that's a super, that's a pretty good chunk of risk there that I learned a lesson early on. And that was a very useful lesson because it got me focusing on managing risk as opposed to just trying to make a lot of money, which I think a lot of traders start out. And especially if they have the unfortunate luck of hitting a good market that just pumps up their account with profits right out of the gate, and they get full of themselves and they have no idea what's going to happen next. That can get dangerous. And there's a lot of those folks out there nowadays.
Oh, yes, absolutely. Did you have somebody who taught you how to think about money and how to trade?
Nope. I simply, I simply struggled and strained my way along. I did sort of have this vision of what I jokingly call super trader. And it's a person in my mind that always makes the right decisions all the time, manages his risk, manages his position sizes, is cool under fire. You can create this magical image in your mind of what a super trader might look like. And back in the days, if we go back to when I had more hair and it was more brown than it is now, when I was in my 20s or so, I really had the ability that there wasn't an internet. I couldn't go on and get a mentor over the internet. I couldn't, listen to podcasts over the internet. There wasn't any appreciable internet traffic. We had dial-up modems back in those days that did 2,000 kilobytes, not megabytes. You were lucky to be able to pull in your data successfully from a service and then ship out your orders somehow. In the early years, I had to call my orders in. There was no ability to even fax them. Finally, I got the ability to fax them, and I got the ability for the computer to produce the fax that I would send. And so step by step, I've made it more automated and made life a little easier on myself, but a lot of it was manual. So wasn't really some, market wizard that I could send an email to and befriend and somehow get advice on what I should do like there is today. So I had to create this magical person in my brain that I could always compare myself to. And I always never, met that criteria. I still don't. I'm still not a super trader, but I have taken on a whole lot of the characteristics of super trader over the years and gotten better at getting closer to super trader. And I think that's what the way I dealt with the situation, just out of sheer need. There was no other local person in where I grew up or anything that I could relate to or knew that did this. So I had to figure it out.
Yeah, I know. I did too. It was staggering around in the wilderness for me back in the very early 90s. I finally found a book and I I got them to send it to, I'm in Australia, okay, but they sent it to Austria. They FedExed it
Yeah,
to
you know,
Austria. I had to pay double FedEx
what's
to be
what's
able to
an
get
what's
it.
a little L amongst friends?
Yeah, exactly. Yeah, we're so very unknown. And how lucky are we now? But do you know though, Tom, I do wonder because I am almost guaranteeing when you said 21-day moving average, there will be people pulling their car over to the side of the road to write down 21 days. I wonder whether the byproduct of having things so well spelled out now is that people feel that they have to copy exactly what somebody else does. There are traders who have those copy accounts. So traders can see exactly the trades that that trader is putting on. Now, I'm really interested in your thoughts. In my view, that is incredibly detrimental because you're not working out your own risk tolerance, you're not expanding your own mind, you're not developing that internal locus of control where you are responsible for your own actions. What are your thoughts about people copying other people's trading strategies?
I'll take you and myself as an example. So we take the two of us. Your situation, you're in a completely different continent. You have a completely different capital structure, probably. You're denominated in Australian dollars. I'm denominated in US dollars. We have different technical skills. I have an engineering degree. I have no idea what you have, but we are not equal in terms of our ability to use computers, our abilities to do math, perhaps. I took thermodynamics and fluid dynamics and all that stuff. I'm probably thinking you probably didn't do that. And so we come from very different backgrounds. We got a different puzzle, financial puzzle that we're trying to solve. So I've custom designed everything I do to fit my retirement lifestyle, my technical expertise, my computer expertise, my ability to get certain forms of data that I can get to, the broker that I use to ship the orders to, all of that is custom designed to suit my unique financial puzzle. Your financial puzzle would be very different. So the solution to that puzzle would be logically very different. And if you take every trader out there in the world with all sorts of different capital, different expertise levels, different contexts they know, different countries they live in. I mean, if you're in Europe, you can't trade SPY, which is one of the most liquid instruments in the US as an ETF. I think it's banned in the Euro land for some reason. I don't even know why. It's a very liquid instrument. It's the S&P 500 in ETF form. They won't let you trade it over there. So if you're living in Germany, you can't trade that vehicle. So everybody's got their own, little restrictions and resources and capital levels and everything. Their goal is to solve your own financial puzzle. And that will not be copying Tom Basso or Louise. It's going to be some other answer than that. So I like to try to give out examples, like my hedging page on enjoytheride.world includes pretty much most of the details on how I hedge my portfolio. I set that out as an example for people to have a starting point to hopefully stimulate their brain and say, okay, this is an interesting concept, but I have a high tech portfolio, so maybe I'm going to use the NASDAQs or the triple Qs or something to short, way the NQ futures or something to hedge my high tech portfolio because that matches up better as a hedge. I'm just giving them an example. I'm not suggesting that everybody in the world go out and do exactly what I do. And I try to emphasize that as many ways and times as I can, but there just seems to be this natural tendency to, what does Tom do and can we copy it? It's not the answer. If you can't run what I'm running with my knowledge level and all that, then isn't it kind of stupid to try to copy me if you can't even do it? If you don't have the capital to do it? I mean, it's dumb.
Yeah, no, I'm hearing you. It is fascinating to see how many people just want to follow like they're the little sheep. And this is not the world for sheep. The trading world does not respond well to that.
No.
And I do wonder also your views on algorithmic trading, because now with algorithmic trading, there are ways to be able to punch in, enter here and exit here and put this much money towards each trade. Now, I was with an algorithmic trader just last week. I want your views on this. He said to me, Louise, I know that you're a specialist in trading psychology, but with algorithmic trading, you don't need to have trading psychology at all because the computer does everything for you. Now, Tom, what are your thoughts on that?
You can see I'm shaking my head. My thoughts on that is the algorithmic trader in the end has to push the button to run the computer to do the algorithmic trading and has the superior power to turn it off or to override it or to ignore it or to do any number of things to it, or to shut it down in the middle of a drawdown because you don't trust it enough, and all sorts of different ways. The human being in all of us as a trader can override everything that every people used to accuse me, Tom, you can be Mr. Serenity because you have everything automated. Well, what if I don't hit the button this afternoon? What's the automation going to do for me? I didn't do my work. You got to be, you still have to do all the things that any trader has to do. I admit that you can be a little more hands off if you understand what the algorithms are and you actually wrote them yourself and you wrote the code that does it and you really trust that. Perhaps that takes a little bit of edge off your psychology. I'll have to admit that. But if you're a non-techie, you're not an engineer like me, and I hand you a black box that says, hey, here, run this. This is my 9 strategies across 4 time periods and across something like 4 different types of indicator sets that I use. Just run it, you'll do fine. And you go into a 10% drawdown or something, you'd have no idea what you're doing. You would say, no, Basso's lost his touch and this is not working anymore. And all right, so abandon it and go on and follow Ed Sequoia or whatever, somebody else. And that's what people do. And it's all psychological in the end, no matter whether you use a computer as a tool to execute it or not.
And the interesting thing with algorithmic trading as well is that we still need to be the ones to consider the risk management. I often feel that people are overestimating the importance of entry, but they're underestimating the importance of position sizing and exit. Now,
Absolutely.
yeah. So it does concern me with some of these algorithmic trading strategies where it's just a fixed position size and it has got an overwhelming emphasis on entry. It reminds me of the beginner trading mentality. I don't know, maybe AI will come in and fix some of these issues down the track, but I still think we are the people behind the strategies involved with running those types of systems. I also see a lot of people self-sabotage, Tom. Now,
Mhm.
one of the people that I saw self-sabotage was just like a flaming blaze of glory. It was so fast. It was absolutely incredible. Just a few weeks ago, Chris Tate, my business partner, and I had an email sent to us, and the email said, I've got this much money, this is my win rate, this is my loss rate, and I want to know how long until I'm a multimillionaire, right? And that's just like a simple maths problem. And it was 11 days until they blew up. That was it. So when you add it up, so people do have a remarkable propensity for self-sabotage. Can you tell me your views about self-sabotage and how we can, first of all, notice when we're going down that path towards self-sabotage, and perhaps some techniques so that we can improve our relationship with failure?
Okay, well, I think self-sabotage can come from all sorts of different angles, so it's hard to generalize exactly, but a lot of it is not taking into account the amount of risk or volatility that you're taking on with respect to how much equity you have in the account. So how many people do we know that have started out with, say, $5,000, either Aussie or US, and then said, okay, well, I would like to retire in a couple of years or something, ridiculous. And you figure out the return they need to make, and it's, hundreds percent compounded by 5 years, and with no losing periods or something. It's insane. And I don't know anybody that's done that. And if they did, it was probably lucky. And then you start thinking about, all right, well, the markets will throw some curveballs at you. So with that much leverage, those curveballs are going to have you down 20, 30, like before you can blink. And are you going to be able to deal with that psychologically? Probably not. And so that there's so many different ways that can go bad. And they just have no idea what's coming next. And that's why I say sometimes when trader starts out, it's almost good to do it like I did. I had took 4 years to get to break even on my futures trading. In the fifth year, I finally made money. And it kind of made me very appreciative of risk management and reducing my losses and being careful with what I do and not sticking my neck out too far. And then that helped me be able to be a more consistent and productive trader over my lifetime. And I just think that a lot of people, they start out and they have a good run. They get into cryptos and it goes to 80,000 on Bitcoin or whatever, and they're now a millionaire, and they're a 20 something and they have no idea what's going on. And I think it's just tough. They've got a lot of lessons to learn, and unfortunately they're going to learn it with $1 million as opposed to a few thousand like I did. So
Yeah, because if you can't look after the small amount of money, the odds are you're not going to be able to look after a large amount of money. We have noticed with members of our mentor program, when people come out of the mentor program into a bull run, because of course over the last 2 decades we've had a variety of different market conditions. Often
right.
the people that come out into incredibly successful market times, they confuse the market activity for their own brains, and they think I am a genius for making money. And often they're the ones who burn out more quickly. They're the ones
Yeah.
that their longevity in the market is threatened, and they're also sulky. They tend to throw tantrums more. So everything you're saying I definitely concur with. What do you feel's next for Tom Basso? Is this something that you've just got in trading ticking along so that you can enjoy other areas of your life the way that Jack Schwager initially discussed in his book about you? Or is
The big
trading still fascinating for you? Have you got other ambitions?
I do have one trading sort of oriented thing that I'm entranced with now, and another one that is non-trading that is almost more entrancing to me now. Let's start with the non-trading one. My wife and I, Brenda and I, just bought a new house, but a 1999 vintage house from the original owner, who did nothing whatsoever to the house. So when you walked in the house and when we purchased it and closed on the deal about a month ago, it was like taking a time machine back into 1999. Everything was the colors of 1999. The tiles on the floor were 1999. The cabinetry, the appliances. The air conditioner is 23 years old. The roof was failing and was 23 years old. So needless to say, I'm going to be a busy boy for about the next 6 to 12 months remodeling this thing. And it's going to take a lot of my time in terms of managing contractors and selecting appliances. And we were out today looking at flooring and tiling, and just a lot of, tomorrow is cabinetry. So that's going to be consuming a lot of my energy for the next 12 months probably. And the trading related one that I'm working on has gotten me automated on 6 of 7 of my 9 strategies. 7th one will be coming up shortly. The other 2 are not automatable, but it will be a platform that can run simulations and at the same time ship orders. So it'll be a updated cloud-based version of some of the things we used to do back at Trendstat in the day. and it'll be available to traders all around the world in the cloud at a very reasonable subscription rate. And it's getting close to the point where we could beta test it. We need a few more indicators. We need a few more filters. We've got the data pretty much coming in successfully. We've got the order generation to one brokerage firm going successfully. And so I've been sort of a consultant on this project, and they now have 3 people working on the coding. We're up to about 100,000 lines of code that run this massive thing in the cloud. But we're hoping to have it to the point where somebody in Australia with their cell phone, could go on and pull up the website and run their orders and ship their orders at the end of the day.
Oh, I
And
love
it'll
that
be
idea. That is fantastic. You know, one of the things that I find fascinating about this industry is that we're also willing to share. You know, if you think about a lot of industries, they're very closed and they don't like newcomers and they purposefully block people out. Whereas this is very embracing and it is very all encompassing. I mean, even the fact that you've just written your book, The All Weather Trader, the fact that you're willing to release some of your trading strategies in an algorithmic format and help people use those. It is a very generous aspect to, I think, this entire industry. I know I've had the pleasure of introducing you to some of my friends, and I know some of the people that know you too. So it's a lovely atmosphere to be in. What do you feel the value of support is for traders?
Well, it's a kind of a lonely thing. I mean, trading is the perfect profession, I suppose, for somebody who's a complete loner, because it is very lonely out there. With the help of the internet, and gosh, I put a notice out just a few days ago about the book coming out next Tuesday, and I think 65,000 views have been of that one simple little snippet, 280 characters or whatever that I put on Twitter, and some 400 likes and some, I don't know, 30 something retweets, and one person quoted from it and another person did something else to it. It's insane. The fact that I'm just a retired guy from the money management industry. I've been retired 20 years now, and I put out something like that, and 65, thousand people roll by it or whatever. It's insane. It's mind-boggling to me, but it leverages me to be able to, talk to you in Australia, for instance, and help, traders in Australia who I've known a number of them over the years. I've got some good friends in Australia. I don't know. It's kind of makes the world a small place. It gives me a lot of friends around the world that I sometimes visit or I hear from on Zoom calls or emails, at least, direct messaging on Twitter, that type of thing. So it's kind of creates a little bit of a social environment in the middle of a very lonely endeavor. So I kind of think it's a beneficial thing, and I like sharing. I have no idea uh, what every trader in the world is struggling to try to deal with themselves, but I've seen a whole lot in 50 years of trading, and I kind of feel like it was time to kind of pull together all this stuff and put it in one place for posterity, if for no other reason, just to kind of create something that sort of covers the autobiography of my trading thoughts and career, and how I evolved from this is where I was and I didn't know what I was doing to, oh, I finally had that aha moment, and I added risk controls and I added this and I added that, and then I added another strategy, and I just kind of take the reader through my entire sort of life in trading to where where I am now. And I think anybody can do it. And I hope to just provide inspiration and kind of stimulation to people's brains. Not that they need to do the same thing I did, and I would encourage them not to. I would encourage them to use that as stimulation for coming up with stuff that fits their situation and solve their own financial puzzle.
Tom Basso, you are an absolute delight. I adore every time we talk, I go away just feeling so uplifted. Can you tell everybody where they can get your new book and how they can get in contact with you?
Uh, as far as I know, I've not done a exhaustive research on this, but I think it's available at least at iBooks or Apple Books or whatever they call it these days. And I believe Amazon has got the link working. It will not be launched till Tuesday, so mark your calendars.
So by the time this comes out,
this
this
airs,
will
it'll already
absolutely be available for you, the
exactly on Amazon.
all-weather trader.
And I believe there's going to be hard copy on this one. There's going to be a soft cover, and there's going to be electronic versions. There will be a Kindle version, and I'm told that an audiobook is in the works. I'm going to be very interested to see who they use for my voice.
Oh, part of me wants you to voice that actually, but I know that would be a
I don't
massive
have time.
undertaking. No.
I don't have time. I could not schedule that much time to do that. So somebody else is going to be Tom Basso for the book, but it'll be fun to listen to myself parroting back my own words to me in a completely different voice than mine. I got to listen to this. It's going to be fun for me. But that's supposed to be 3 to 4 months or something by the time they get the real book out in the format that they want. And then that person has to talk to me and get an understanding of the topic, so they say the right things and embellish where they need to try to make sense of graphics and tables and things like that. So there'll be a lot of conference calls back and forth with myself and the narrator, but it'll be fun for me, a different project, and then they can do the bulk of the narrating, which is a pretty tedious process.
Completely. Tom, you are absolutely so welcome on Talking Trading at any time, and I'm just one of your biggest supporters. You've inspired me back from the early 90s without even knowing about that. You had no idea of my existence, but oh my goodness, I definitely knew about you. So for everybody listening to Talking Trading, look up Tom Basso. He's on LinkedIn, he tweets regularly, and definitely get a copy of his book, The All-Weather Trader. Thanks so much for your time, Tom.
Hey, thanks so much, Louise. That was fun.
And I'll see you again next week for another episode of Talking Trading.